Hello, good morning everyone. Today we are going to review the reversal setup, how we can improve the signals and how to use them in different market conditions. On this, first let's make a review of which are the signals that this indicator paints. Here we are watching a live crude oil chart where we can see a confirmed signal, a confirmed reversal with the RVO entry. This horizontal line shows the entry price for the RVO entry, and on the current bar we have a possible reversal. This is an unconfirmed signal with also its entry price. Depending the position of the current price, the reversal can be enabled or no. So the dot can appear or disappear depending if the logic says that we are or not in a possible reversal. We can also see the entry price for the RVO entry of this unconfirmed signal. On the reversal we use a stochastic to define if we have or not a signal. The reversal signal is the dot, and the horizontal line shows after the dot is painted where is the RVO entry. This is where we should place a buy stop entry if we want to use the RVO entry mode. For example, on the past, on this bar we have a confirmed reversal and also an RVO confirmed entry, because the price touched 3 ticks below of the low of the bar with the signal. When that horizontal line is painted, we have a certain number of bars, by default 3, to wait for price to touch that level. That means that the reversal signal confirmed is at the end of this bar. So this signal is at the close of this bar. Instead, the RVO entry is at a certain number of ticks, by default 3, from the low of that bar. For the current bar, on this RVO, on this reversal dot, the RVO entry is 3 ticks over the high of the signal bar, and we wait 3 bars to get a fill or the signal is cancelled. On this bar we have a possible reversal and also a possible entry RVO price. Now that we have an idea of the different type of signals that reversal paints, here on DAX we had a reversal dot and also an RVO entry. Usually the best signals are with the trend. For example, on this example we have several long signals against the trend. So we can add filtering to the signals, and then we can decide if using the reversal dot or the RVO arrow. Usually if we apply a filtering, we can go with the dot, with the reversal dot. Let's see some examples on Dow Jones. Here we have all the signals, the dots for the reversals and the arrows for the RVO entries. The RVO entries usually works very fine on range bars, and if we want to do some kind of filtering, we can add a moving average. So let's add an EMA of 50 as a reference, and if we look at the slope of this moving average, we could only take the long signals when the slope is positive and take only the dots instead of the arrows. We can also take into account the slope of the moving average to avoid places where there is not a defined trend, and only taking signals when the slope is big enough. On this example, for example, the slope is almost 0. It is positive, but almost 0. So we may miss that signal if we apply filtering. We can use the filters included on the reversal indicator. One of the filters is for the trend, the location of the price against the moving average, and also the slope of the moving average. Here we are using the slope. If we place a period of 50, then we are only showing signals that have that are aligned with the slope of that line. So all the signals with a slope bigger than 0, then we get a signal. We don't get any short signal. Here we have one because the slope is negative, and there are no more signals. Only when the slope is good enough and aligned with the signal, then the signal is painted. If we use another type of time frames, it is a little more difficult to fine-tune the settings. For example, on a 1 minute chart for a volatile market, it may be difficult to get good signals. Here we are looking Dow Jones on a 1 minute, and if we remove all the filters, we may get not so good signals as we would wish, because the stochastic is not working so good. Maybe on a slower time frame, like 5 minutes, then we may get something better. Like here, we can flag all the tops and bottoms, but we will need some kind of filtering. So we only paint those tops and bottoms that are aligned with the slope of the moving average. On tick charts, it is a little better and easier to fine-tune. We have much better signals. We can ignore the RVO entries. On these shorts we can get at least 5 ticks, but on these are not good signals. All these signals may get no more than 5 ticks. This is a good short and this is a good long. Anyway, it will be much better if we apply a filter. This 50 moving average looks like working fine, so if we add again the filtering, then we get only the longs with the trend. And let's see if we find a short. I will add more days. Here we have two short signals because the slope of the moving average is to the downside. And on this uptrend we don't get any long signal. Maybe because the stochastic has not it was not on the overbought area. Here we have a short signal and another two short signals. If we remove the filter, now we get a lot of signals against the trend. On this short, the slope of the moving average is to the upside, and on this long, the slope of the moving average is to the downside. So this is against the trend. One of the charts where the stochastic works very well is the Unirenko. And on this bar type, we need to make an adjustment on the threshold levels of the stochastic. We need to increase them. This is explained on a different video, but just to have an idea, we need to increase these levels. And for the Unirenko, the RVO entries has no much use because the way the Unirenko works, usually having a dot is enough to have an entry. And we can apply some filtering also. So here we can see on this current bar we have a possible reversal and a possible RVO entry. The RVO entry is too far on this type of bars, so this is the reason why it is not too much useful for these bar types. I will remove we can remove the arrows, the RVO entries. on the reversal indicator by disabling the markers with this option. So now we only get the reversal dots, confirmed and unconfirmed. If we also add a filter, maybe we need a slower line here, but let's try with the 50 again. Then we only get long signals and only this short signal here. This long reversal dot may be a break-even or a loss. Let's remember when the dot is painted. The dot is painted at the end of the bar, so we entry maybe near the close, near the open of the following bar. So we may get on this example something between 60 to 75, no more than 5 ticks on this example though, so this is possibly a loser, maybe a break even. If we make the period of the blue line slower, so we get a more linear behavior on this line, let's say 83, or maybe even slower, like 100. Now the slope is always positive on all the uptrend, so we can avoid that short. Let's see how it looks on the signals. If we change the settings of the filter on reversal, instead of 50 using 100, now we get much better results. We get these two long signals, which are very good. We keep this possible loser, but anyway, we get a lot of very good signals. The idea to show this is that the reversal is a counter trend signal by design, because it uses stochastic overbought and oversold. But even so, we can use filtering to use a stochastic or reversal signal even to trade with the trend, if we use the filters that are included on the indicator, or even any other line slope that we can add to the chart, like for example a linear regression. Hope this has been useful for you, and if you have any question, please post below this video. Thank you everyone, bye bye.